And I'm being a little tough today, huh?
I
Hey,
know.
welcome to our Wednesday Homebuyer Seminar. I'm Bill Gross. I'm here on time with the right link at 4 o'clock p.m., as we are regularly every week, well, almost, along with my colleague
Patricia Castillo.
and our friend and lender.
Shattered Lender. How's it going, guys?
Fantastic. And so here we are. Uh, the end of September, September 25th. Uh, the home purchasing year is almost 3/4 over. How
That's right.
about that?
And from what I'm seeing, and this is with me following up with my clients that I've, met at open houses and kept in touch with them. Everybody's been waiting. It seems like there's a lot of pent up buyer demand and they're still wanting to buy, but waiting to see if rates are going to do anything, drastic this year. Um, and so I've had a lot of buyer consultations this past week from buyers that are just wanting to know. It's like a refresher, what did you tell me again about FHA and down payment and this and that? So I am seeing that a lot of clients are, wanting to buy but holding off.
Interesting. And what are they waiting on? They just the rates to go down even more?
Yeah, yeah.
Interesting.
And
Okay.
so, and then a couple of them have car loans they're wanting to pay down a little bit more. Usually everybody has a car loan, but some
I
of them,
don't.
except
I
for Bill.
don't not either.
So, yeah, I've been talking to this week. I was following up with a lot of leads I had from open houses, and a few weeks ago it was like a different vibe. And most recently, this week, it's been we're paying down some debt. We're wanting to make sure they're not overextending themselves. So
Interesting.
paying down debt, yeah, and wanting to be comfortable with making that mortgage payment.
Wow. Well, Bill, do you have anything to say about that?
Um, I don't have a car loan, so I don't know a lot about car debt. I
And
haven't
he
had a
doesn't work
car
with
loan
buyers.
in so long.
Oh, interesting. Interesting.
I was at a real estate investors event today, and they actually asked me to speak. And I've done pretty well in the last few years, but I drive a paid for Jeep, and I think in the whole
Oh,
parking lot, I think my car was the cheapest car in the lot, except it was also cheapest to operate. It's paid for. I don't drive. I don't go a lot. So I bought a Tesla worth of stock a few years ago, and then I sold that stock, and I bought a house with that investment property with that Tesla that I don't drive, and I drive a.
man. When did you buy it? When Tesla was what? How many shares?
I went up about 50%. I probably could have picked the timing a little better, but there was a time when I had good money, and I thought I might buy a new car, and then I was kind of watching the Tesla thing, and I said, I think if I want to own a Tesla, I'd rather own at that time $40,000 worth of Tesla stock. I said, you know what? I think I'll just buy the stock and keep my car. And my car has a lot of cosmetic things that need to be fixed. I mean, it's really, I've got my money's worth out of it. I paid cash for it. I think it's a Jeep 10 years ago, and it's pretty beat, and it runs okay. But like I said, I'd rather own my car and the house I'm in escrow on that I'm going to make a couple $100,000 on than having driven a Tesla instead. So it's just one
Interesting.
of those things where hey, if you can afford a Tesla, good for you. I'm not against owning nice things, but I think you should be able to pay for them. I don't think I
Hmm.
just see so many people who are real estate agents are people who want to invest. And like this one lady told me how she just couldn't get the money together. And after we left, she got into a really nice BMW. And I thought, wow, she's probably paying what, 600 a month, 800 a month?
At least,
At
yeah.
least minimum.
Plus car insurance. Like my car insurance is really cheap. My registration is cheap because my car is
Yeah.
older. And like I said, but I bought a Tesla with it. I just then bought a house with the money I bought the Tesla
And
stock with.
on that note, for any buyers that are watching, and I actually just recently did it, any people that I qualified for 6 months ago, we look back and you can refinance your car loan to get a
Yeah.
cheaper loan if rates are
Right.
down. I'm full disclosure, I don't know what car loan rates are at, but
Mm-hmm.
all I can tell you is I did have a client recently refinance her car loan. So her car payment is lower now, and now she has more space for more house payment, which the house payment also went down as well. So if you got a quote from a lender in the last, with this year, this is the time to call them back, call me and say, hey, what is it now? Also, we can look at, like you said, refinancing your car payment so you can qualify for more. I recently got into an escrow with a client that actually wanted to do CalHFA back this year, but the rates are higher. Now we're doing a CalHFA and the rate is 6%. And he's like, wow, I get more house, for similar payment. They got into escrow right away. It was a condo, but still, it was perfect timing for him because he also got a great deal. And, the payment's going to be less than he thought. So if you guys, this is a prime example. If he was prepared, he called me actually in December, qualified him in January, just because of the holidays and everything like that. Didn't hear from him ever after that, but he called me back. Hey, what is it now? I got his updated pay stubs. That's all I needed, and updated his credit. And I said, here's your updated pre-approval, and they were in escrow within a few days. So
Yeah.
an example of
More buyers come around now that were interested before, but now they're kind of starting to raise their hand again and
yeah.
ask what they can qualify for with today's rates.
Exactly. So again, as we always preach, guys, be prepared. Even if you don't want to pull the trigger now, and like Patricia says, you just want to hold on the sidelines, I'd rather you be on the sidelines with, your thumb on the trigger when it comes to buying a home and putting an offer in. So worst case, you're already prepared, you're already qualified, you already have a pre-approval that you can give to your agent right away. If you see a house tomorrow that you're like, okay, now it's the time, now I'm ready, you can just boom, hey, we have the approval letter, I want to go see it, let's go. So, have your bases loaded when you're ready to make your move. Don't try to make your move now and get prepared, because that's going to take, at least a few days. So, I would.
In some cases, it could take like up to a year for somebody from the moment that they, a buyer thinks about buying a home, they talk to a realtor, they talk to a loan officer. There may be some things that need to be worked out. Maybe it's paying off a credit card or a couple. Maybe it's paying down car loans. And in that case, it's about creating the blueprint for each buyer. So it's really a tailored and customized, thing that we have to do for each buyer, because everybody's scenario is different as far as income and liabilities and down payment, right? So we need to look at all that information. But the sooner that buyers get started, the better, because it could take at least 6 months in some cases.
Yeah. I mean, if you're qualified and you're ready to go, it might be a few days where you get qualified, and then it's up to Patricia to see, okay, hey, let's go see the houses, let's go do that. But again, like I always preach, if you're looking to buy a house, if you're even thinking about it, you don't want to do it right now, but you're thinking about it, at least as you're thinking about it, know what the monthly payment's going to be, know what your cash to close is going to be, at least know what the rate will be today. So at least know your numbers as you're thinking about it. A lot of people think about buying a house, but the way it becomes a goal and not a dream is if you have all your ducks in a row, and at least hey, these are the numbers I need to hit. And even if you don't think, hey, I don't have the right credit, okay, well, let's see where your credit's at and see what's the gap. A lot of times people think I need a 680 FICO to even qualify. That's not the case. What's bad credit to you, the bank still will accept. And even if it's a slightly higher rate, that higher rate today is probably the normal rate that it was 6 months ago. Mm-hmm. So again, if your objection in your head is, oh, I don't have a good credit score, well, let the lender tell you. Don't tell yourself no. If it's down payment, at least know what you qualify for in terms of income. The down payment, you'd be surprised how you can make that happen, whether it's down payment assistance, whether it's, getting help from family, friends.
Or a grant, a homebuyer grant in some cases.
Exactly. But if you don't have at least your ducks are on that point, you don't even know what you need. And I'm even having agents say, okay, well, at least I know we need a credit, to help them out. Worst case, but in most cases, like Patricia says, there's grants, there's down payment assistance programs. You'd be surprised who would help you too if you have a pre-approval letter. I've had people say, oh my God, I sent this qualification figures to my parents, and they said that they would help me. They see I have the credit, they see I have the income, I have the work history. I just need X amount of dollars. You'd be surprised. So if you want to make it happen, I can tell you now, you can make it happen. It's just a matter of you taking that first step, talking to a professional, and getting your numbers right and getting ready. So even if you're on that boat with Patricia saying, hey, you know what? I want to wait on the sidelines for the election. I want to wait for rates to drop again. You want to be on the sidelines prepared with your numbers, with your paperwork, ready to go, ready to get in the game. Because once it's your time, we got to move fast. So be prepared, talk to a lender, know what your numbers are, so you know when you're ready to go, you know exactly what you're getting into.
Well said. I think interesting factoid, the average buyer from the time they start the process to actually close is about 2 years.
Wow.
So if you've been working for 6 months or 9 months your credit, it's not that unusual. And there are people who take longer.
Yeah.
And so we just had to do the work and do the preparation and to achieve the goal that you want. I'll also never forget when I was a realtor for the first time, full time, was right before the election where Barack Obama was elected. So that was 2008. So I remember calling all that year. People said, well, I want to wait to see if he's nominated because he was running against Hillary at the time. And then after he was nominated, I would call people, well, I want to wait and see if he wins the election. I remember writing all the names down. These people said they're waiting. And I called at the week after the election, I called all those same people. Well, I won't wait till after he's inaugurated because then he can really do stuff and things will change. I said, okay. So I called back in, at end of January. Well, yeah, but it's going to take, 6 months or a year for his policies. And I realized the people who don't take action don't take action. Those who do had already bought a house and had probably made 5 or 6% on the house. They already made, tens of thousands of dollars because they took action. And I was chasing other people. And so I would just say, don't be that person who always is waiting for something. That's not to say that you shouldn't wait for the appropriate time for you. It just means that you can wait the appropriate time and do the work. Get your credit lined up, get your expenses cut, make some extra money, put money away, get with your professionals, get your game plan together. You can do that. That's different than saying I'm waiting. If you can't afford it yet, but you're going to get a raise or you're paying something off, that's different. But let's not be that guy who waits. I'll never forget. If I won't get political here, but it's like, come on already. Can you just pass a law so these people start buying houses? Well, it didn't really happen. It happened because it had nothing to do, even though that was a historically significant factor from an American history point of view, had nothing to do with buying a house. Nothing at all. So anyhow.
Yeah.
Okay, Patricia, what do you see going on?
So, as far as my clients that I've been talking to, buyers, some of them are a little closer to pulling the trigger. Some of them, it's kind of like 50-50. Some of them are still waiting a little bit more to get their, to get more prepared in terms of debt and income. I have a few listings that have sold, so I'm happy about that. But, I do want to say when you are in escrow as a buyer and even as a seller, but when you get prepared to make the offer, it's also staying prepared throughout the transaction, right? It's not just making the offer, you get into escrow and then you wait till it closes. There's certain responsibilities that the buyer has throughout the escrow period, and those are your contractual obligations. So in one of the escrows that I have right now, just to give you a live example, the buyer's team is the realtor, the lender, loan processor. Everybody that's working for the buyer is considered the buyer's team. So the buyer decided to go with a different lender in the beginning of the transaction because they were offered a better rate with a different lender. So during their 17-day contingency period, they chose to go with another lender. But they also switched the loan types, loan product. So in doing so, it delayed the escrow. So now they're past their contingency period. And in exchange for an extension to close escrow, they were charged $100 a day from the original closing date. So from August 13th, that was our original close date, they're being charged $100 a day. And it looks like we're closing Friday. So, you can just imagine. You get into escrow thinking, oh, I'm just going to, go with this lender and get an appraisal and sign the paperwork and I'll be closed. But it doesn't actually happen that quickly sometimes. There could be delays that another lender comes up with that the buyer has no control over, right? Because they're just acting accordingly to what the lender is asking them for. But these are things that a buyer would need to know and their realtor before they just switch lenders in the beginning of a transaction. Because if you get a notice to perform, you have 2 days to perform the act that the buyer is being asked to perform. And after those 2 days are up, then the seller can issue a demand to close escrow, which if you're not ready to close, you're going to lose a property, right? You still get your deposit back, but now you've lost a home that you really pictured yourself in. And so these buyers, they absolutely love the home. They didn't want to lose it. So they're paying the $100 per diem until we close. So that's over $4,000 that they're being charged. So it's a hefty price to pay because they decided to go with another lender.
I've had occasion where we did that switch, but the new lender was able to credit a certain amount, let's say $100 a day times 30 days could be $3,000, maybe half of it or all of it, in the form of a credit towards closing costs, given that they had, the rates had gone down, they had a better pricing, and were able to pass on to the customer an offset to that, and still it made sense to change lender. On the flip side, I've had lenders who would say, well, I can get this deal done in a certain amount of time. And I would say, well, great. If you can't, are you willing to pay the $100 a day that the buyer's liable for? Or I would say to the buyer, get them to commit to that. And those lenders who promised they could do it, all of a sudden meekly said, well, I'm not going to promise. I'm not going to pay if I'm late. That's your problem. And so, again, those things are all negotiable. And that's why we want a strong agent like Patricia, and a lender who's never late like Shannon to be on your side, part of your team.
And even so, I think that's a great point that you make, Bill. And unfortunately, I don't know how to calibrate this. Maybe this is a great thing if you guys know how to. But when it comes to situations like this, when, hey, for example, you're getting hit with a per diem or, a fee daily for not closing your loan, a lender that's willing to stick it out and say, and I've done that plenty of times where, hey, you know what, I'm going to give you X amount. I'm going to credit you X amount for this mistake. Let's get you to the finish line. Let's help you out. Professionals like that have skin in the game with you when things go wrong is the professionals that you need. And unfortunately, I don't know how you can tell ahead of time when that happens, but I know on my end, I've had to do things like that, a good amount of times in my line of work. But what I found out is I win a client for life on my end, right? That's the benefit of me being in the game for you. And I've had to give certain credits and do certain things in order to get
you bleed with your client, right?
One of the things that my aunt says, and she's been in real estate for forever, she actually got me into the business. But she says, look, and I guess this is more for professionals, I guess, not so much for first-time home buyers, but I guess for first-time home buyers, make sure you have a team that thinks like this, which she always told me, if you're going to get in this business, the day you start looking at the commission, it's going to run away from you. But the day you start looking at the people is when you'll never have to worry about the money. Yeah. Not never, but you get the point is focus on the people and the money will come. That's what
the rest will follow.
And the rest will follow. But the minute you start having what she called commission breath, I always remember that. She said commission breath. Don't have commission breath. Don't look at the numbers. Don't look at the money, in that way. And if you do that, better things will come. So I've had situations where I've had to, like you said, give out certain credits, and we got to do what we got to do. One is better than zero. Let's just say that. So, but I was able to win a client for life. They refer me their family and friends. That's what's been able to keep me going. So, I say all that to say, and I know we have to go, but maybe on the last final note, you guys can probably help. We can help the audience in how they can know if their agent lender team is there for them in the long run. Because, unfortunately, sometimes you just have to figure out when you're knee deep in it,
And that's the advantage, I think, of an experienced team is we've seen a lot of different things, whereas new people don't. And so I think the key is, and we're also, in my case and Patricia's case, we have very experienced brokers behind us who also help us out. And I've gone to sometimes to brainstorm. And if you're committed, you'll find a way to get the job done. I know it's a little more challenging now with all the disclosures and the timelines on the disclosures. Because in the old days, you would just email back a document and you would close. Nowadays, you got to redisclose if you're paying for something. I don't know. The whole thing is like working with the post office, but it can be done. If you're committed to it and you're communicating, and that's the key is you want people who are committed to helping you and are communicating. So let's wrap up because I know that Patricia, she's very busy. She's a very productive listing agent, and we're lucky to have you here today, playing with the little people. Patricia, thanks for joining us today. Really appreciate it.
Well, my pleasure. I love being here. But it looks like we have a question from Matthew Price. Do you see that, Bill?
Oh, I did not, but now I do. The buyer's not getting anything from the seller. What kinds of things does a mortgage lender need to know how to qualify the buyer for the buyer agent commission? So just to kind of rephrase this question, up until this ridiculous lawsuit, for 100 years in America, a seller would pay a listing agent, and the listing agent would, as part of that agreement, offer a portion of the commission to the buyer's agent. The buyer didn't have to worry about the commission. It was being paid for by the seller and or the seller's agent. Now that's not allowed between the two agencies. A seller may offer a commission. That's one option. Or a seller may pay a concession to a buyer that's not commissioned. The buyer can either put in their pocket or pay to their agent as commission. And so the question that he's asking, Shannon, what do you need to know about qualifying a buyer? And I think the answer is if you assume that there's no commission being paid by the seller, not the seller's agent, there's no commission being paid by the seller to the buyer's agent, we have to figure the buyer either has to pay for it out of their pocket or make sure in their offer they ask for a concession to pay for it in escrow, correct?
Correct. So let me repeat Matthew's question, and then I'll get to it. So,
so let's be very clear on this because this
yeah,
is like the whole ballgame right here.
Matthew's asking if a buyer is not getting anything from the seller, what kinds of things does a mortgage lender need to know to qualify the buyer for the buyer agent commission? That's a great question. So Matthew, the answer to that question is what does a mortgage lender like myself need to know if you're not getting anything from the seller? We need to know, and this is very important. This is a conversation mainly for you and the agent that you report back to me. And I don't mind getting on a 3-way call with you and your agent because I've had to do this now. And you have to agree upon how much your agent is going to charge, how much you guys, both you and the agent, think is fair in terms of a commission for the agent, because I need to know a number. And what I'm going to do with that number is I'm going to email you with your estimated closing costs and what I call your cash to close figure. And what is a cash to close figure? A cash to close figure is an estimate that a lender such as myself will give to you and let you know, hey, this is the estimated total number you're going to need, everything included, your closing costs for the buyer's agent, your lender fees, your escrow fees, your appraisal fee, everything. So the bottom line is, to repeat, the answer is your mortgage lender needs to know how much of a commission you and the agent have agreed upon, because that number is then going to go into your what's called cash to close estimate that we will send to you and let you know this is X amount of dollars you will need to get the job done for this property. So I hope I answered your question, and obviously I'll put in chat my email if you have any other questions.
So just to recap, so you have the buyer's closing costs, which might include them paying the buyer's agent commission.
Yes.
But at the same time, any or all of that can be negotiated. The seller agrees to be paid for by the seller, right? Mm-hmm. So in essence, what you're creating is a blueprint that says, okay, either you're going to pay for this or the seller is going to pay for this. When we make our offer, either we can make a more aggressive offer and not ask for it, or we can make a more easier offer for you to finance by asking the seller to pay for these additional fees, which is in essence to the seller the same as reduction in the sales price, right? So you could say if the property is, let's say, selling for $500,000 and the buyer's agent commission you guys agree on is $5,000, you can offer $505 and the seller pay a $5,000 commission, $5,000 concession to the buyer, or the seller can pay a $5,000 buyer's agent commission to the buyer's agent, but you need to do that with your offer and know that up front, right?
Yeah, and I think his question though is if they're not getting anything from the seller, what happens then? I think that's the question.
Right. And I also think in your answer, what you will also point out, which is the buyer's agent commission should be, at least in California, agreed up, at least with our company. I guess you can do whatever you want in life, but the way we do business is that's agreed before we show property.
Yes. So again, that's going back to the answer. You need to have a conversation with you and your agent ahead of time and agree what percentage do we think is fair for the buyer's agent to receive. Once you have that estimate, that percentage or number, you report that back to the lender. The lender needs to have a number or percentage already so that way he can factor that into your estimate. Because as a loan officer, if you have a good loan officer, he's going to let you know ahead of time. Here's the rate, estimate today's rate. Here's today's rate. Here is your estimated closing costs. Here's your estimated prepaids. And here's the estimated cash. We want that bottom line number. What's the estimated cash to close? What's the number I need all in based on your estimates? Because obviously as a lender, we do not know what escrow's fees are, what appraisal fees are. We don't know what all these fees are initially before escrow, but we do have estimates based on past experience. So we will give you the cash to close number, factoring that percentage in.
It just shows you how complicated this whole thing got and how we're all very concerned about not violating it. The change
But if we have
simple.
a team, it should be easy. It should be very simple. If you have an experienced agent, and I'm noticing this, you just have that simple conversation with your agent. It should be a simple conversation if they're experienced. I know it's a new one, but if you're a first-time home buyer, everything's going to be new, so it's not going to be as an adjustment. You just have that conversation, and then you report back, hey, lender, I agreed X amount for my agent and commission in case anything goes, worst case, this is how much we're going to charge. Can you factor this into my estimate? So I'm prepared as a buyer to know how much I'm going to need to close at this purchase price. And that's it. You have your estimate. It's X amount of dollars, including your buyer's agent commission. This is how much you're going to need. Have that prepared and ready to go, and we can move forward.
So interesting. I'm mostly on the listing side, so I see these offers come in. All that's been handled without my being involved. Where I have been on the buyer side, I'm working with very sophisticated investors who aren't looking to finance the commission. I can see where, for particularly first-time buyers who are short funds, these are very important procedures. You got to get nailed down and make sure your agents are, your team is on board with all this. So thank you for walking through it again, Shannon. And I know. Patricia, we kept you long today than we planned on. So anybody wants to get a hold of you, Patricia, what's the best way to get a hold of you?
So best way is my cell phone, 323-365-9909.
And I kept it a little longer today, so she's going to charge me extra because she's a very important listing agent. And Shannon, the lender, what's the best way to get in touch with you?
Yes, you can call me at my cell phone, 661-317-8484, or you can email me at Shannon, my first name, at Horton, Horton, Homes, HOMES, CA as in California.com, or as we always like to say, my Instagram, which is FUND, Fund with Shannon. That's my Instagram account. The other one we'll talk about in a future video.
Yeah, well, the fun with Shannon, he's actually the Dodger game down the third baseline. So you know, the Dodger game, catch up. If you see him there, he'll buy a free beer on me. So, and I'm Bill Gross, at Bill Gross Probate on social media. Thank you, everybody. We do this every Wednesday, 4 o'clock or 5 o'clock, depends on where things fall out. Thank you guys for being on the call today, and we'll have a great week.
Thank you.
Talk to you soon.